The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Hi everyone, Basil Chapman sitting in for Larry Pesavento. This is Trade What You See, and I normally do the noontime show called the Tiger Technicians Hour, and my daily service is the opening call, daily newsletter. Hey, this is a really, as I said last week, I thought it was a very important week. Coming into this week, at the end of the month, I think a lot of things are going on here that we need to discuss. So here we go. The Dow futures are down 157. Doesn't sound like very much, and it isn't very much. It's holding. Now, Larry, of course, doesn't use any of these techniques that I'm talking about. I'll show you right now. Well, first of all, the Chapman wave consists of identifying the lowest low bar and counting each successively higher peak. There can be 6 peaks going all the way to a G. There's never an H. I alphabetize them sequentially, but it's at that fourth highest peak, peak D, that other things can happen. All right, just keep it as simple as possible. And I'm looking at, look at this peak D. This is even in the futures, in both the cash and the futures. Look at that peak D a year ago. February made that peak D, a whopping 39% decline from that level. All right, now what we're looking at this particular point is another pattern that I have, which is where I use alternate counts, or I use a phantom peak, meaning that the technicals, as you can see by the blue on-balance volume and the stochastic and this relative strength line, there was a little wiggle, just enough to say that this high right here should have been a leg D just above that all-time high in the futures of 31,662 on the 16th. And that would have given us the missing D, because at D, other things can happen, but we did get it in the cash. So now I can give you parameters to look at, and I'll do it since it's Larry's show, and most people who are involved with Larry's show probably look at the futures. I'll use the futures. The high was 31,647 in leg D in the daily on Friday. That's the missing link. Once you get to D, the buy mode is completed. It's objective. It can go higher, but the objective of a buy signal being upgraded to a buy mode on the upside is that you should get to at least a D. Well, we got to the D, and there's really little chance that we're going to make a higher high than 31,647 today on the cash. Now let's go to so that'll be a peak D, and that's exactly what we're looking for, and you've got your phantom peak. So that says, on the downside, if there is a slide below this low right here, the low of the 10th of February, which is at 31,119, if there is a slide and then a close below that, there's just a really good chance that the MACD will close lower. The stochastic, which is really strong at 88%, probably go down to about 84%, something like that. And we will start to get signs that say the top that was made in the Dow and the cash on Friday is probably at least a short-term top, and we should be digesting big gains. Now, I want to run through these quickly because something I want to get to in a moment is gold and the Bitcoin and the bond yields. I think this ties in very nicely. And let me just click this here. Which version do I want to use? I don't know. Current. I'll just go to current. Okay. So even as I'm looking, I'm saying, well, it's held. Look, it broke above the 14, the line, the pink, and then goes green, the 9-period moving average. So it broke above it decisively back on the 2nd of March. And this is the first time that we've actually slipped underneath the black 14-period moving average. So that's a sign to say, hey, be careful. Let's move on to the E-mini. In the E-mini, unlike the Dow, which made another high, all-time high on Friday, the E-mini hasn't. Since the 16th of March, the high of 3959.25, I had to go through this very carefully over the weekend and even up until this morning. to say there could be another count. It's unusual. If so, those of you, do you remember in 2007, where the Dow made an all-time, the markets generally made an all-time high in the summer, and then pulled back very sharply, and a lot of people were saying, oh, this is it, it's all over, it's all over. And we were looking at it based on the Chapman wave methodology and saying, but there's still internal strength, so there's enough strength to go higher. And then the weekly chart skyrocketed higher, and it made what I call, it's like a right arm extension that you see in the MACD, and it goes higher, and then it starts to fail without going to a C and a D, but it's usually an alternate count, F and G. Well, that's what we've got here if I use the E-mini. So that says, be ready that this could, in fact, be a more serious decline, and you will know if there is, in the E-mini, we've already gone below the low of the 10th of March. Now we have to look at, we have to go all the way to the candle of the 4th of February, and 3869 was a high, 811 was the low. Well, we're at 3874, but I would suggest to you that a close on the E-mini anytime in the next 2 days below 3850, let's call it 3848, would suggest that was a top of significance in the daily chart. The weekly chart, we've got to a leg D, probably going to make a peak D this week if we don't make a new high. And that's what we're going to be following. So a lot of cautiousness for my subscribers. I've been saying, we've had absolutely fabulous gains in some stocks and indexes. It's just so unusual to get that. We've been whittling away. There's another whittle that we took today. We are long the IWM from 173 in a second buy entry point. That was on the 11th of November. We had one earlier on, and we didn't get back in until late, so we got back in on the 11th of November. We had already moved quite sharply higher. You can see over here, we didn't get in at the lows, but we got in pretty well in November, and that's a huge gain. It's about 38%, and I said, let's take another little bit off today at the open, and we'll just keep that core position, and we'll try to trade around it. And that's a leg D, peak D in the weekly chart, only a leg C in the monthly, and the S&P is only a leg B. And that says 2021 should see much higher highs. We should see higher highs, even though there could be a pretty decent pullback. So that's that. And the QQQ, I'll just do that right now, has an alternate count going to a peak D at 338.19 4 sessions ago. So if there's a break above this week, above 339, that's fabulous action, but it is already a leg E in the weekly chart. I wouldn't be surprised if we started to make a peak E. Now, I want to show you something. Gold is up quite nicely. It's up 16, not a big deal, but it's at 1793. One of the reasons why I actually, for one of the first times in a long time, I actually like gold as a trade. This is gold, not necessarily the gold stock, just gold, is because you see this little doji candle of Thursday and a bigger doji candle, meaning a doji opens and closes at just about the same price. Well, that low is seeing a higher high today above the high of Thursday and Friday. So that means we could pull back, but we've kind of broken out. The unbalanced volume's got a nice V-shaped pattern. At 12%, the stochastic is very oversold. Doesn't mean to say that it has to bounce, but it is bouncing nicely with a strong balance volume. And that says if money comes out of BTC, Bitcoin, it goes into
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi everyone, Basil Chapman saying for the one and only Larry Pesavento. So what we're looking at here, I'm saying that gold has a chance now to have at least a bounce. And then that bounce could become more than a bounce if it can close above 1835, probably the 200-period moving average of 1838, and the 50-period moving average just a tad above it. But one step at a time. I think 1830, just getting to the 18. It's at 1794 right now. 1808 is the 14-period moving average resistance, so we haven't even gotten there yet. So I don't like to go too far out. I am saying that these particular candles right now with the Chapman Wave silent doji right there, and then this long-legged doji right here, and a move above it immediately is usually a sign that says there's a chance now that the selling pressure, because that's often what a doji candle implies, it says stalling at the moment because we've got buyers and sellers at equilibrium, and then you want to see, is there a reversal, a strong reversal. I mean, before I forget, I just got reminded, I have a webinar coming up tomorrow a week. That's Tuesday. It'll be at 4. I said 5, but it's actually at 4 o'clock, 4 to 5:30, and it's going to be on, let me just show you this right now before I forget. This is the IAI. The iShares Broker Dealer and Security ETF trading at 89. It's probably going to be pulling back. Here's another reason why I'm not sure. I could call this an alternate count, G/B. It's held really well. So how it comes out this week, if it starts to close under 86, that's going to be a problem. And if it closes any day, can touch 90, that's going to be a good sign. The reason why I'm talking about it is that with at least the last many months, an exponential move in the number of folks that are now becoming either traders or getting involved with the stock market. It's been incredible. The numbers are astounding as to the increase. You remember, I don't know, for those of you who ever listened to my show, the Tiger Technicians Hour, for how many years since the 2009 low have I been saying, tell me, on Thanksgiving, Christmas, whatever holiday it is, when you got together with friends and family, did anyone even talk about the stock market? And for years, it's not just years, it's almost, it's uncanny how long? It's over 10 years that very few people initiated talk about the stock market or said, oh, man, I just doubled my money, and you've got to buy this. And you go, oh, you're involved in the market. What do you like? Nobody. And all of a sudden, over the last few months, just that's a big topic of conversation. So I'm having a webinar talking about the historical significance for me and the significant move from people. And I said, at least for the last 2 years, that there's a good chance that people are in the market because the market kept going higher. And there were people in the market, but to initiate a conversation about the stock market suddenly gets you into politics, and nobody even want to touch that. So they never spoke about the market. Now it's kind of cool because you've got this whole thing about Robinhood, etc. So that's it. And you remember the discussion that I had back in 2000? Let's go to the Bitcoin, because this is all relative to what I'm going to be discussing. BTC, remember I said I went to a New Year's Day party at a neighbor, and this was Bitcoin. This was back right here. I got to go to the GBTC, Bitcoin Investment Trust. And I said, I just been to a party, and this was December to January, so December of 2000, there it is, 2017, January 2018, January the 1st. And everybody there was talking about Bitcoin and all the stuff they'd bought. And then there was one person that said, I missed the dot-com bubble. I missed the housing. I missed the whatever it is. He said, I am not missing. I've been buying. I'm in. I am in to stay. And I remember saying, I don't know if anybody even knew what I did because it's just neighbors. And I said, I'd be a little careful with everybody talking about it like this. And I had Bitcoin in leg F in the Chapman wave methodology, and I was about to get some kind of a sell signal. And it went from 38.71, had a little bit of a pullback, from 38.71 to $3.60 in 2 years ago, February of 2019. So I'd call that a little bit of a pullback, and that was a crash. I know Nadine says it wasn't a crash because crashes just wipe things out. No, I think, to my idea, that is a crash. There's no other way to call it. That's not to say that it's disappeared, because at $3.66, it had a really good rally. And in fact, for subscribers from Opening Call, we were lucky. We got in at $12.48 and $12.41 for short-term and long-term traders, and they both had exactly the same. We've held it all the way through, and I'm now getting very, very cautious, and we've taken little bits off all the way up. And when you go from the GBT from $12 to the high of Friday, which was 58.22, you got to say this is absolutely unbelievable. Now, the reason why I'm mentioning this is that the kind of talk that we got at the Bitcoin high right there in December of 2017, we've got that in a sense. The whole GME, everything that occurred had the same emotional factors that we look for. And what I'm doing is I'm having a webinar to say, what are you looking at now, and how positive or how negative could it be? What are we looking at for 2021? What are the implications? So I just wanted to mention that. That's Tuesday a week, and that will be for subscribers to my Opening Call. And you can become a subscriber. It's easy enough, and you get a 30-day guarantee. You can get your money back. All right. So here we go. A couple of questions just came up. So I'm going to look at silver. Look, silver is moving just modestly. It's up 23 cents at 27.48. This is the continuous contract. It's made a peak E in the weekly chart. It's only at a B in the monthly. It's a way. I've been saying that silver's a much better chart than gold. The reason why I like gold right now, and silver might follow, this time it was silver that was leading and gold was following. I suspect if there is a rally, and a lot of it I think does depend on the Bitcoin. Let me just show you right now. Bitcoin is trading down 5,000 now at 5,100. Now it's worse, 5,040 at 50,420. So this is a leg F. The last F at 42,730 on the 8th of January saw a dreaded H pattern. Let me just call it a dreaded H. It's where you come down sharply, usually from some kind of a high, and then you try to rally, and it fails, and it takes out the left side low, and then what happens after that is important. Well, it did take it out, and then what happened is that the Bitcoin held beautifully, and it kept going up, and it took out that old high of 42,730. So here's another peak F. How deep this is going to be, I don't know. And at this particular point, if there was a direct relationship with gold, we'll see. I think gold should be, well, now it's up 19. And I'm a little bit delayed, so up 19 at this point. I want the day to close to see gold up 23 to 25 points and close near the high or even better. So let that be said. Next question I had was, could I look at, we've got a break coming up here, FLR, that's Fluor, I believe, a great company for infrastructure. Yeah, Fluor Corporation. I'll be back in a moment. Basil Chapman sitting today. Pesavento, the dollar.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi everyone, Basil Chapman singing for Larry Pesavento. Dow's down 170, S&P's down 27. This is going to be very important because I want actually to see a rally. I want to see a counter-trend rally by Tuesday or Wednesday. I want to see an attempt at least trying to make new highs. I want to have the market confuse bears as much as possible. And then I think we are ready for some pretty decent decline. I'd prefer it not to happen right now. That's just my own little preference for a couple of reasons. And all I'm saying is that there was enough evidence going through all the different charts, Dow charts, my own, the picks that we have, where we've had some really good percentage gains on stocks. Now I'm saying those are stocks that look to me to be somewhat vulnerable, and we're going to see in the rotation what gets what works. Just someone mentioned Amazon. Well, Amazon's, I think, going to break down a little bit. Yep, there it is. It's down 42 at 32.07. You can see peak E in the weekly chart on the week of the 4th of September, 35.52, pulls back, comes into this sideways rectangle range, and it makes a very small peak A, B, C, D inside a rectangle. That's usually a sign of weakness, not strength. But it's also not a sign of that you have to break down. It just says at this particular point, the upside is limited. How you break the downside is going to be important. So 3,000, looking out for the next 2-3 weeks, that 3,000 level is going to be so important, because a break under that says, and at 32.05 right now, down 44, that's not such a big deal. But I'm watching it. And remember, I did this to spend a little time on my show recently. I said the 900.40 level in Tesla all-time high. There were signs at that peak F top that there was a pattern that I may as well show it, the pattern that I call the dreaded H. Why? Because if you take out the left side low, you can keep going down. I would look at 3 major patterns. That is straight line up or down, cup formation, arch formation, a mix between 1 and 2 or 1 and 3. You've got 1 and 3 right here, red. If it takes out the left side low, you can keep going down. And here it's positive. You take out the Y, a reverse Y, the left side high, you can keep going higher. So what this I call the dreaded H. Goes way back to 2003 or so, when we were looking at gold, and gold had made a peak D top. I think it was Newmont Mining in the monthly chart. And I said, you got to be careful. This is dreaded H. And if it takes out the left side low, it can keep going lower. And we saw that gold after that high of 2003, I think it was, it just kept going lower and lower. So here's your dreaded H. Takes out the left side low in Tesla of, what was it? 780.10 back on the 29th of January, rallies all the way up to the 870s or so, and then arches over, takes out that left side low, and then it goes even lower, and now we're even lower still. So, and my target, remember I had this little yellow, this trend line. I said this is a trend line that I was anticipating, the 750s, even the 730s, but 750s is first. Based on the 50-period moving average, gray dashed line, my trend line support, the dreaded H pattern, and today we're trading at 753, down 28 in Tesla. I think Tesla's done for a little while. Not that in electric vehicles aren't going to be the sexy play periodically in 2021 with higher highs to come, but a short-term situation, I think at least since January the 25th, Tesla has been consolidating, and even this has to be considered in the weekly chart, it's consolidation, but you've got a peak E. I would not be surprised if the 650 area in Tesla is tested at some point over the next 6 to 8 weeks. All right, let's get back to our story here. So the question, let me just do high-grade copper. High-grade copper has made a new recovery high. This is unbelievable. Look, leg D in the daily chart, leg E in the weekly, and only a leg A. Copper has gone from $2 back in 2020 to over a double. This is copper. And this is one of the reasons why I say if you look internationally, we're looking at something very different here. We're looking at Dr. Copper, which is international economic activity, although we have to put the batteries into the pot pie right now because there is so much copper being used in the batteries. For the electric vehicles. So this continuous contract is trading right now at levels it hasn't seen since 2012, September of 2012, and then goes back to that high that was made in August of 2011 at 4.93. But the actual high was peak E with, look, you see these two little candles? Doji candle right here on January of 2011. At 4.94, this is a continuous contract, so the price will change. The patterns and the lettering, nothing changes, but prices get smoothed out, so the price could be different with another long-legged doji right there, and then a breakout which went below that low, and that pattern. Why am I talking about it? Because that was the high that was made at 4.94 5.09 back in February of 2011. And let me just show you this once again. Am I going to mix apples and oranges? I'll do that. Why not? Let me just get out of this. Let me show you this one more time. The reason why I think that gold has a chance just to have a pretty decent bounce here is, remember that the candles we were just looking at the high of copper? Well, we just had the inverse. Look, there's a little doji candle, a long-legged doji candle at a new low, not a new high, is the opposite. New low, there's a mirror image, and a nice breakout to the upside. That's the reason why I'm saying I think gold has made at least a shorter-term daily. I'm talking about the daily chart, short-term bottom. The weekly chart, the dreaded H, the theory in the dreaded H is that you have 2 to maximum 3 bars to break and close above the left side low. So the left side low in gold continuous was week of the 4th of December at 1,771.1. Friday we went lower, went down to 1759, round number. I always look at round numbers, even though it was the futures. Round number low. And then what happens is you want to see within 2 bars, maybe 3, a close above. Well, the close on Friday was 1777.4, so that was above the low of 1771 back on the 4th. So that's one sign. Here's the second sign. And that's the reason. And now gold is up 25. That's exactly what we wanted to see. 1802. Keep moving, keep moving. So that's okay. Gold. Now, just real quickly, the dollar is just having a terrible time. It's making the dreaded H, right? A big dreaded H with a small dreaded H, and that massive move to peak E at 102.99, pulling back to 89.21. Look at this monthly candle, horrible. I'm talking about this. We actually are long for subscribers. We've been long since April the 6th of 2018 and 19.07. Only took a small bit off at 96.58 on the way up, and then it ran all the way to 102.99. We followed it. There's a reason. I don't want to waste time talking about it now, but there is a reason for holding the dollar. And maybe later in the year it'll be back again. It's more an economic icon like a Harley Davidson or Louis Armstrong internationally. These are American icons that people recognize immediately, dollar being one. And I thought if economic recovery is very strong, the dollar should reflect that. Anyway, that's just my theory. So in the meantime, it's at 90.21 and acting very poorly. With all that said, very poorly. EUR USD, as we're going to go to a break, the Euro EUR USD currency pair doing quite nicely at 1.214. I think we could have a little bit more of a bounce. Maybe gold is moving up because inflation is here. I'll talk about that as well.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Hi, everyone. I was just asked about a Fleur company. This is part of the more like an infrastructure stock. And let me just do this right here. So look, upside down. So the daily chart has made a peak D. It's pulling back. There's a pattern that I look at very often, and that, see that coming down, see that parallel line right there. So if there is a move down that starts to form a base and then it can rally strongly, that's going to be a good sign. Right now at 1823, FLR up 95 cents. 1825 it's nice action. Gap up, someone must have mentioned it. Peak D in the weekly chart, only a leg B. And now this is a chart, I wish I had it all notated. This is one that I usually have notated over all the years. I mean, this goes back decades as I remember it. Let me just see if I can squeeze it. Squeeze. Yeah, we're back to 96. This is one I followed periodically. We've had it, but not for a long time. I actually like it, but at this particular point, I'm a little concerned. I don't think there could even be some talk. There's so many other things being trying to be legislated. I think the infrastructure stuff, and I'm calling it stuff now because we don't know how it's going to formulate as any bills are promulgated. But at this particular point, I think it's just kind of stuck for now. So if you're long, I'd say that's fine. In fact, if you're long with an intermediate term outlook, I suspect that 20 to 21 would be a target by end of May, maybe April, end of April, beginning of May, hopefully sooner. But most importantly, I think it's going to be stuck between 1630 and this 200-period moving average of 15.4 in the 15 area for a little while longer. So it's something to put on your list if you haven't got it. Or even maybe nibble on a position right now, but with a fairly tight stop. And this is one I would add to at any point. We might not be in touch until then. At any point, if this starts to trade above the high that was made on the 8th of February of 20.30, so that's 2 points. In a stock like this, it does move 2 points over a week or so. So yeah, that's what I'd be looking at. But it just might. On the shorter term, I'm just saying I'd have a little caution. I wouldn't get too carried away. But this is definitely on the list. I don't want to see a head and shoulders in the weekly chart. I don't think so. But this is one that I think over the period of 3 to 6 months, we might be looking at this huge ugly candle from the month of August of 2019, 32.50, 31 high, no, 51 high, and a 16.25 gets cut in half, low. So if we can get halfway into that a little later this year, and that would be at the 25 area, that would be fantastic action, but you're going to have to wait. It's going to have to be steady. So there we go. And so a couple of questions came in. All right, TLT. The TLT is bonds. Trying to turn around here. It's up 24 cents. And part of this is also when some of your leaders in the stock market start to decline sharply. Money often drifts and goes into the security of fixed income. That's the area we're looking at right now. So this is leg D still because it went to a lower low than Friday. I have to double check that. 144.32 and 144. Oh, is it right? 142.85 and 142.83. So by 2 cents, that's what it looks like. Yep, by 2 cents. So this is still a leg D. I think this is going to turn. And then what we should see is that yields, T and X, this is the 10-year T and X yield, T note yield, has made look at that. This hasn't gone to, the yield itself didn't go to a new high. It's making a peak D. Look at the last peak D, the fourth highest peak in the Chapman wave methodology at 11.87. Pull back sharply with the dreaded H formation, and at about 10.20 or so, saw a new move up, and now it's trading at 13.30. That's 1.33. So we're going to be watching this really closely, and there's a little nervousness now. So let me just give before I run out of time. The overview here is that yields, while I'm getting this, I'm going to just show you something I show my subscribers to my opening call every weekend in my video that I make. Where's new? Right there. So as this is coming up, let me show you. I think we're very close to some kind of more intermediate term, short term, that is weeks of a pullback in the stock market. How serious it is depends on what we're looking at here, because the biggies are going to pull back, I think, deeper than the ones that have led just recently in the general market. And that says to me, if we have a rotational correction, then Dow right now at 31,367, 1,000 points, maybe 1,300, 1,500 points. And then I think we start to find some kind of a base. S&P 120 from where we were. That would be actually a deeper one because it's already down 100 points. So maybe another 80 or so, 100 points. That's going to be key. But buyers, the whole thing about the slew of new buyers is that fund managers are going to be forced to follow stuff that they wouldn't normally do in a different way. I don't want to get into why or how, but that's just my thinking. And therefore, when we're looking at this particular pattern right now, when you see the white is the TYX, the 30-year yield, it broke out. It's saying at, what is this at this point, 21.25, 2.12 in the 30-year T bond yields. This is leg C, only a G/C in the weekly, and I think it will go to a D. Here's the T and X. This is the 10-year T note yield, the brown one. And the thing that I'm talking about is some kind of discrepancy between the yields. Look at the distance between the 30, the 10, and then the 10 and the 5. And look what happened when we were at the highs back in November of 2018. 3.45 was the yield. It went, the 10-year, the 30-year went down to 1.24. That's unbelievable. Gets cut by 60%. And now what is it? 12.42 to 21. It's almost doubled. So we're looking at something a little unusual here not the pattern. This is still just a plain old cup formation, but it is bonds. So bonds are starting to act a little bit more like stocks in the big moves that they have. So I want to follow that, because if there's a move to the 10-year 1.3, if there's a move in the 10-year towards the 1.45 area, I think it's going to be a bigger impact. And here you have the Philadelphia Housing Index trading down 3.79 and 424.11, made a high 3 weeks ago, 431.94. Let me just double check. I didn't update. 440.25. 440.25. Let me change that right now. So we are looking at something here that's a little different. 440.45, and it's pulling back in a peak E in the Philadelphia Housing Index. This is a weekly chart. And wood, the iShares, remember I spoke about how copper's been so strong, and that's international. That's an international currency in the sense that it's talking about worldwide economic action being so strong in copper. So to put it together with the timber and forestry, which went to an all-time high just last week, is that correct? 88.48. I've got Yep, 88.48, all-time high. That's amazing. So we've got to consider that time for a little bit of a rest. I don't have any problem with that at all. So Basil Chapman sitting in for Larry Pesavento. I'm not going to beat the clock right now. I'm going to say we're about to go to a break. I will be doing my show at noon today, the Tiger Technicians Hour. There's just a lot to discuss. Prepare for my webinar coming up from tomorrow at 4 o'clock at TFNN on what's the implication of all these investors coming into the market.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, just $89, exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. Just as we wrap up here, Basil Chapman sitting in for Larry Pesavento, and my service is the opening call, and that's my daily newsletter and the Tiger Technicians Hour coming up at noon, another 2 hours, and I'll be back. So I wanted to show this picture. I would love to give credit. I don't know who took this picture, but there's this guy on this huge rock, and all he needs to do is have a little bit of a slide there, and there's a little problem. And look, way down there, beautiful beach. Look at that. And I thought, wow, this is what a perfect time for this picture. This is I don't feel it's the same for the stock market, but I do think it's the same for a number of sectors. And at this particular point, I think I have to put Bitcoin into that sector. Look, here's that Bitcoin, BTC. It was down 5, now it's just down 2,500. But I think it's getting ready for a pretty severe decline. Now, I don't know about time yet, because there's this whole cushion right here between 40,000 and 32,000. but it's trading at 52,000. So that's like a 25, 35, could be a 40% decline. I don't know if that's going to be the case, but being long via the GBTC, this is just a time to be much, much more careful. I think that the chances of pulling back now in Bitcoin are much greater than going much higher. You can go a little higher, but going much higher. Now, famous last words. Who knew when we got in at 12,000, equivalent of 12,400? Did I even dream? I would have been happy with 15, 16, 19. It went to 42, pulls back, and then it goes from 42 to 50. What was that? 58. That was today's high. 57,790. So just be careful out there. Let me just review one more time. Talk a little slower. 27 points up in gold. This is the candles we're looking at here, the same chart formation that I showed you in high-grade copper way back in 2011. That was the monthly chart, but patterns are patterns. Doesn't matter whether you're looking at the 1 minute pattern. Look, remember I said peak D is so important. Look at the peak D right here in the 1 minute chart at 8:51 a.m. this morning. 3880 pulls back sharply to the 3860s, goes to a peak D, pulls back, and now it's peak A, peak B, peak C, leg D, yet another D. I think there's enough room in the market to try to go higher. You've got to be careful. I've seen another few days at the end of the week. Have a wonderful day, and stay tuned. You've got great programming coming up. You've got the Bull Bear show coming up. Then you've got